Thank you so much. So I just arrived. American Club actually is pretty premium and very private, like avenue for everyone, right? So very glad to see everyone. This is Yolanda from Panony and PA News, one of the biggest Chinese media outlets. And now we're happy to have everyone here to discuss about the Bitcoin ecosystem, especially on the staking and restaking. So at the very beginning, I'd love to pass to Joe as the first one to introduce yourself a little bit and tell us the overview of your project.
Yeah, so hi everyone, my name is Joe Huang and I'm the head of the Asian market for BounceBit. So for, how many of you have heard of BounceBit? That's not enough. So basically, in a very simple term, that BounceBit is focusing on the CDFI restaking. Like if you treat us like a bank, so-called, we provide a fixed term yield, and we have the flexible yield as well for BTC and USDT. So as simple as that. So we also build a more ecosystem on main coin launchpad, build on the different AIs, infra, and games and all that. Yeah. So it's a huge ecosystem, and the BounceBit is the main chain itself. So yeah, feel free to explore more. We provide very interesting yield in the bear market. Yeah.
Okay.
Hi everyone, my name is Makoto. I'm the co-founder of Pell Network. We are actually the first omni-chain trust marketplace powered by BTC restaking. In a very sort of short way to describe ourselves, we are essentially like an either plus. First, in the sense that we actually use BTC as the underlying asset to provide the economic security for our DVS ecosystem. Secondly, we actually are deploying BTC assets not only for BTC ecosystem but also for EVM, SVM, and many other VMs ecosystem. Because we see that the real use of restaking as a business model or as a value proposition is to actually help not only bootstrap the BTC ecosystem, but use BTC to actually help address the bootstrapping challenges of any kind of applications on any chains. So far we have actually been deployed on over 10 chains, and so we have accumulated a TVL of over $300 million and growing. Very happy here today to discuss with the fellow panelists on BTC staking, restaking your opportunities. Thank you.
Thank you. Luis?
Hi everyone, so I'm the co-founder of ScaleBit. So we actually are security and company for the mass adoption of Web3. So besides ScaleBit, we also have another brand called MoonBit and also TomBit. So we audit a lot of good projects in BTC ecosystem and the Moon ecosystem and also on the Tom ecosystem. So we are a security company. At the same time, we also building a lot of infrastructures in different ecosystems. Like in BTC ecosystem, we actually launched OpenTab library. It's open source library for Bitcoin builders so that they get to start to learn and play with TypeScript in a very user-friendly way. So, and we actually also we define ourselves a premium auditor. We want to working with those good quality projects. And recently, a lot of our clients get listed in. So, for example, Kaizen audit us listed in Binance and also in BTC ecosystem like the RGB plus like ScaleBit, they get listed in Upbit recently. So we also a proud auditor of Zulu Network. Hope you guys can also very good listing exchange. So we do cover a lot of projects in BTC ecosystem, like as I mentioned, like ScaleBit or I should say RGB and also Unisat. Unisat, I think, and also like Arch Network and also Marine and the B-Scale Network, and also lots of like ecosystem project like BitSmart and etc. So we want to keep securing the BTC ecosystem, and I think one of our features we do that make us different with other auditors is we actually have a Secure Plus program. So basically every smart contract auditing we finished, we promise if in a month without any code change, if you find any other auditors or maybe you find some major vulnerabilities by yourself, we can refund up to 50% of the auditor fees. So that means we actually very proud and very confident in our audit results. So yeah, that's pretty much all about ScaleBit or MoveBit or DownBit. Thank you.
Yeah, of course. Thank you, Luis. I think later we can dive deeper on the topics around the security and the transparency.
Sure.
Yeah.
Yeah, thanks so much, guys, for coming out. So my name is Eric Lifson. I'm co-founder of Zulu Network. I just want to again thank all of you guys for coming out today. And I think each one of you guys should give yourself a round of applause for being on the vanguard and like the early, still very early stage of Bitcoin and the ecosystem. And this is the early stage, but I think there's a lot of excitement and a lot of incredible innovations coming. And so, for Zulu, our core focus is, as we can call the event, it's about like moving beyond just a store of value for Bitcoin and what's the next evolution of what we can do with Bitcoin by scaling it and using ZK technology, ETXO, and things like that to like bring the next level of mainstream adoption and usage. So thank you.
Thank you, Eric. So let's start from Joe, you again, to specify like how important do you think to bring the traffic from the traditional finance to DeFi, and also can you share a little bit more about how the Bitcoin yield is a positive like for this space?
Yeah, so the importance of bringing the TradeFi money to the Web3 is like bringing new 韭菜, it's like new joiner, We need liquidity, to be honest. Like everyone knows, like in this bear market, why the market is not performing well, why people are still waiting for the interest rate to be dropped, people still waiting who can be next US president. That's why I wear Trump. But yeah, I just try to, we are finding, every single one of us are finding where the new money coming from. There's more and more projects built up, but everyone's very surviving because you can see not only on the coin performances and many on the market activities, to be honest. So bringing the TradeFi people or other new sources of money comes to the Web3 industry will be critical that we have new blood comes in. So with more new users, more new 韭菜, hopefully like this whole cycle can be alive again and including more turnouts.
That's pretty direct.
Yeah, so yeah, that's what I think is very important for here. What's the second question again?
It's like how important is Bitcoin yield?
Yeah, Bitcoin yields.
Like to this.
Yeah, it's also similar. It's like if the yield is big enough, it's attractive enough, of course, more people will come in, right? It's a very small cycle, so let's be direct. Next.
Yeah. Okay. So I'm gonna pass to Makoto. Like when people talking about like staking and restaking, actually how important restaking is like to the Bitcoin ecosystem, like in your opinion?
Well, thanks for the question. I think in our view, where Pell is positioned is actually a two-way market. On one hand, of course, we provide with the BTC holders who contributed to the TVO a yield opportunity. That's on the supply side. But on the other side, we actually also work with early stage projects who actually would want to utilize or rent this BTC-backed economic security, and they're actually willing to pay a fee for it because the simple alternative to that is to actually use their own tokens to incentivize the consensus and to actually help attract and retain validators to actually perform the job to maintain the network security. And that actually we have seen in the past resulted in projects engaging in very high inflation, not out of choice, but because if they want to secure their network, they need enough validators. And to actually incentivize the validators, they have to actually pay this kind of lucrative APRs to have them on board. Now, we offer to them that if what is really the core concern here is actually your network security, especially in your early stage when you're trying to bootstrap your network, you don't have to actually do this using your own precious resources. You can actually rent it from Pell network and let our node operators back your network security, and we actually pledge it with the BTC that is actually contributed by our users, so that it's a high-stake game now. If any malicious activity, intentional or unintentional, has happened on your network, then the BTC is subject to slashing. And I think even thinking about BTC getting slashed is scary enough for us to have that comfort that the actors in this setup will all try their best to be honest and to actually perform their duty. And for the projects that we work with, what's beneficial for them is not only stronger security, but also probably lower token emission in terms of the fees they have to pay when it comes to using this security. And actually, we even offer the option as we launch our testnet in the next 1 month. They don't even need to use their own token to pay for the fees. More details, I think, coming out later. But I think this is how, in our view, as a marketplace, we marry the supply of BTC and the demand for yield. And we actually do this in a virtually risk-free environment. Although, of course, on the other hand, we also don't expect our users to demand sky-high returns on that, because the risk is already taken care of. So that's how we see it. Thank you.
That's fair. Actually, it's a very positive side for the Bitcoin holders, right? And also like less risk to move your Bitcoins. So I want to pass to you, like to now's the turn to like dive deeper on the security and transparency. So Luis, why don't you tell us a little bit more as an auditing firm focused on Web3, what key areas do you think Bitcoin native yield protocols should focus on to ensure both transparency and security?
Yeah, I think from the security perspective, what you mentioned about transparency is actually very important. Like, so right now, even though like I think in previous panels, like there are some mentioned about a lot of custodial solutions, and also people mention about BVM, like maybe this kind of solutions can help you secure those assets. So to able to get more like liquidity or unlock the liquidity of Bitcoin, I think the Bitcoin holders caring more about its security. Like they don't want to lose their money, and just for those incentives. So of course, like doing auditing quite important for those different kind of projects, and also the second part is probably making their most to make sure the transparency. Actually, something very related to Bitcoin script or maybe task script is not that transparency as smart contracts. So when you deploy a Bitcoin script into Bitcoin mainnet, you're actually not able to get the source code, and it's very hard to verify whether the code you open source is similar as the one you deployed onto the Bitcoin mainnet. So that's actually one thing working with a lot of projects, like we working with our clients trying to make sure we can verify their Bitcoin script to make sure this is more transparent and more secure. And right now, to be honest, Bitcoin script, or I should say task script, is the developer, Bitcoin script developers not that much, and there may some kind of security concerns when developing with Bitcoin script. So why we mention about OpenTap, the project, we want to do security education for Bitcoin developers. So get more developers play with Bitcoin scripts and know how to verify Bitcoin scripts. So that's also one for our purpose. And besides that, I think to be honest, I think right now the technology, especially related to the cross bridge, the cross channel, maybe those bridges, is way far away from perfect. Right now, a lot of tech stack still like 5 years ago. There are not too many advancements so far. Hopefully, this can be kind of have some advancement with like BVM or maybe OP-Card, this kind of solutions come out. Maybe there are something will be changed, maybe in next 1 year or maybe 1 year or two. So we are looking forward to this kind of fundamental change in technology side. And actually the user education is already good enough. Like those Bitcoin holders, they know. I think they know right now there are lots of like bonus or maybe a lot of kind of APIs there. If this technology problem can get solved, probably we can have a day that we can nearly unlock the liquidity of Bitcoin. That could be a BTC 5 or maybe a BTC 5 summer coming. Okay, thank you.
That's a good one, BTC 5 summer. But I think release real liquidity is very important like to this industry nowadays, especially for Bitcoin ecosystem. So I'm gonna pass to Eric. And I think speaking of like a community and a user adoption, how do you balance both two, like with the good yield programs?
Yeah, I think that's a very good question. So let's get right to the main crux of like what everyone's thinking, but not maybe fully able to articulate. Because when we talk about yield, and we talk about staking, and we talk about Bitcoin native yield, the biggest question, and we have to really examine it, is what is Bitcoin native yield? Because, when you think about, for example, Ethereum or things like that, it's inflationary. So you can always add more tokens, and over a period of time, and then people can, stake or do certain things, and you can continue to print more tokens, just like a fiat, like the US dollar, and still give them the rewards. As I've said before, like the biggest advantage of Bitcoin is its biggest disadvantage for DeFi in that it is deflationary. So you can't just make more Bitcoins. There are only 21 million ever. So when we look at that, when we say Bitcoin native yield, we have to actually look at what is the yield that's going to be given. And I think there's a lot of really cool innovations, like Pell and things like that, Babylon, that are starting to explore that, like Lorenzo. But I think that we have to really understand what is it that's actually going to drive that. We saw ordinals, for example, but that's a cool innovation, but it's not necessarily something that's going to like long term, really drive it. So I think we have to like think about what's going to be the next true innovation, and what's going to genuinely like make it valuable and necessary to do this. And I think that's where the real yield is going to come from.
Thank you so much. So based on what you stated, here comes to an open question for you all. Like, how can you make sure that the yield generation becomes sustainable? Like, how to keep the yield like being more attractive, or does it keep it like attract more users? So Eric?
An open question is, has yield ever been sustainable in crypto? I don't think the answer is yes. There's actually been, I don't think there's ever been a clear use case of sustainable yield. So if you look back at like, the ERC20, ICO days, or the last round of DeFi summer, it was just like print as many tokens as you can, create the liquidity, and then buy. And so like, that comes back to the crux of the issue, is that what is Bitcoin native DeFi and what is yield? I don't think the answer is clear yet. I want to hear what you guys think.
Okay.
Luis?
Yeah, I think actually that's a very good question. It's like sustainable yield is, some kind. So actually comes to me another related to observations. Actually, like people observe that DeFi summer end is very related to the American, like the interest of federal interest. When it's kind of increased, then DeFi yield become less attractive. So it's relatively compared. If the if the real economy not good, probably BTC yield, say 5% or 6%, could be very good yield. So I think it's relatively comparable to the other place how it goes. And if we want to provide a good yield, probably provide a more use case or maybe scenarios. For example, like a Background, they trying to provide a lot of, say, security for other service for other post network. Those post network probably can provide some yield. Their tokens are kind of benefit.
So can I jump in?
Sure.
The thing is that like, you're right,
Yeah.
until they release more tokens on the market.
Yes.
Once they have a lot of tokens in the market, then there is no sustainable yield.
Yeah.
And that brings us back to the exact same problem. It works as the market is going up, but once the market starts going down, or they have a lot, they just keep pumping more supply on the market, it isn't sustainable.
Yeah.
And that is, it's not saying I have a better solution,
Yes.
it's just a fact.
Yeah. So the best is trying to using other people's token to
Yeah.
provide yield.
Yeah.
And besides the security service, they're also trying to, I know right now, they also provide some financial gadgets for those, say, layer 2s. So that's also kind of service trying to bring utility. So, I agree, it's kind of unsolvable problems, but people are trying to explore different ways to provide some benefit.
Hey, Eric, may I know where do you put your money?
Yeah, I mean, different places.
BTC, USDT, where do you?
I would say like very diversified, to be honest.
Okay.
Very diversified.
So, are you earning anything from it, or just like putting it as a?
Yeah, for example, like if you look, for example, like coupons, right?
Uh-huh.
Like you can earn like 10% from HSBC by parking your money somewhere. To be honest, if you look at like a typical investor, and you say, hey, I can, if you come to crypto, and you can earn 10% or 50%, they'll be like, I'm not going to do that, because I think that when they come to crypto, they want something. They either want like, go to 0 or 100x, and I think that like they're not. That's not how they're looking at their portfolio. They're like, I can just go to a traditional situation and go and get 8% or 10%. I don't need to do something much riskier, perceived riskier, as going to crypto. And I think that's like if we can't entice them with something, and then the question is that sustainable?
Yeah.
I don't know.
So I have a different angle. So the type of the people you have already preset the image that those people are assume a gambler. Like they have this mindset, either going big or going zero, right? And these people don't care, bro. They don't care about any sustainability or sustainable yield,
Yes.
because these people are not here to earn a proper money. They are here to gamble. So for us, what I see for sustainable is really moving what we already have for the traditional finance into the Web3. Like traditional finance, we have bonds, we have what we call the fixed term. Those things can be happens in Web3, if you think about it,
Why?
right? Why not? Because at the end of the day, if you look at exchanges, they are providing a staking protocol. You can looking at the Lido, looking at the Pando, looking at all the staking banners, the borrowing loan. People are taking money. Why are they borrowing money? Because they think they have better trading strategy in the market that can bring them profit more than the money they pay for the loan. Agree? Yeah. So
We're talking about in the crypto industry, right?
yes, exactly. People.
But that's still a very small amount of people.
Yeah, you can take. Okay, so there's a market makers. People really taking a lot of money, borrowing lots of money. They pay the interest rate. If you're looking at the Binance borrowing rates, they can charge up to 5 to 6% per week or per month, because that's a huge market maker borrowing that similar amount of money and profit more than 10% or 20%. Is this a room for arbitrage? Yes. Then these people, you just need to do is let your money be lended out to those people who are good at trading, and you can earn the yield. That's what we do here.
And I guess that's C DeFi, but like that's via Binance, which is like a centralized exchange.
Yes.
What do you think about the decentralized part of it?
Yes, that also works. DYDX and they all have. You can have the on-chain swap functions, on-chain lending protocol, AMM portals, and all that, they can be, utilized. It's just for difference between them and the centralized exchanges. Like they have someone control, verify, and control you to lend out. But like in DeFi world, we just build a smart contract, and I just borrow your money. I'm gonna write a contract that I will pay you in 5% per year, but I will use your money to do whatever that you have the on-chain record. That this can be a product, So to me, what I think for sustainable is at the end of the day is there people still borrowing money? Is there still people trading? If there's a liquidity, there's still a room, a market, demand supply. They can have supply. It's just a matter of how big or how small the yield can be.
What are they borrowing to buy? That's the question.
Then, if there's borrowing to buy on the market maker side, or
So okay, for example, here is one hypothetical. If let's say they're going to Binance, why are they going to Binance? Because they think that if they can lend at 5 or 6% and then go buy some random altcoin, they can make much more money. But what if it's during a bear market? Then is there a market? And that's just retail, right?
you're right.
Do you get what I'm saying?
Yes.
Like your point makes sense in a bull market, but doesn't make sense in a bear market.
Yes. Why? Because you look at the liquidity 24 volume, trading volume, is Binance dropping? How much money or how much trading volume does all the top tier exchanges are making today comparing in the bull markets?
Much less.
Much less, but they still have. Why? What are they trading? Who are they trading? These can be the market makers. They don't be retails. There's people who still arbitrage because the crypto market is still new, is still immature. It's not like mature as regulators, mature as TradeFi world that people are size every single arbitrage opportunity. There are still people who do arbitrage, borrowing money, trading, just lesser retails. And what retail can do? They have lesser options. The more money they trade, the more money they lost. But if there's someone who are the market maker who says, hey, you know what? I open up. Whoever wants to use my strategy, just use DeFi to give me your money. I trade for you, but I earn certain admin fees or taking portions of your revenue. This can be an earned product, stake product, and that's what BounceBit do. And we leave what's good for the pros, and if you don't know how to do it, leave it for the pros.
So it's basically like a.
Sorry, just want to chime in here. I think when we look at yields, we have to always look at the association with recent return, right? I think what Eric and Joe both have mentioned in terms of source of yield, I think is associated with how much risk a given person or given entity is willing to take. And I think, of course, if your risk tolerance is higher, in DeFi you can straight away go for looping, right, to max out your leverage, and of course then you run a risk of getting liquidated. But on the other hand, I think for those who are looking for really sustainable yield, this in TradFi, we're probably looking at guys who invest in, for example, US Treasuries. I'm happy now to take 5%, soon actually maybe 4.5%, and it's going to dwindle down from there even more, right? But I'm still going to park my money there because I know my principal is pretty much guaranteed. Well, upon maturity, I can get my $100 back, then some, right? So I think, for example, for Pell, we are actually targeting in the way or providing the users who have this kind of lower risk tolerance that first and foremost, I want to protect my BTC so that if I put in one, I get back at least one. And then if I can get a reasonable amount of yield, then I'm happy. So I think we probably need to segment the market into different user profiles with different capital input as well as their sort of expected return and a kind of loss they can take. For example, if I'm someone with 100 USDT, right, I 8-pin the coin, it's either going 10x tomorrow or it's going 0 tomorrow. That's okay, right? Because that's also part of the fun of crypto, because you just need to win once out of the 10 times you actually 8-pin and you break even. And I think the DJ side of all of us, at least at a certain point in time, will try this kind of strategy. But also, I think Eric also mentioned something important, which is allocation. Right? I'm not going to put all my bags into this kind of strategy because then for a lot of us, that's too YOLO for us to actually take. Right? And I think when we talk about the sustainability of the yields, just want to add one more point here is that the word sustainable is also relative. Sustainable doesn't mean perpetual. There's nothing that has been perpetual in even the real world we live in. Right? So maybe we need to time box it. When we talk about sustainable strategy or yield, it may work for some time. And I think we probably have to have this evolving mindset that the strategy underlying and the source of yield may change in composition or may change in nature. But so long as I'm actually getting something produced in my BTC investment, it could be coming back to me in the form of additional BTC, that's fantastic. It could be coming back in the form of stable coins, that's also good. It could be coming back to me as altcoins, as we have seen in DeFi summer. And people back then actually really loved to get this altcoin yield, right? So I think from time to time, and of course when it comes to a bear market, if there is a strategy that can actually yield on BTC some stable stream of income, that would be fantastic. I think we haven't seen a clear example of winner here, otherwise we probably will be all throwing our money behind that. But what we have confidence in this market cycle is that there is so much more heightened interest, passion, investment, development, developer engagement in BTC. So as time goes by, just as we have seen in different areas of crypto, we may actually see something that will surprise all of us. So sort of just keep an open mind, and we would love to see where the future takes us.
Thank you so much. I think there are so many layers to explain or observe BTC as an asset and also a tool for everyone, especially for the Bitcoin holders, right? So no matter it's like a liquidity provider or a portal for them to utilize more value of Bitcoin, it would be great to see the diversity of this industry, especially it's still like at an early stage. So I'm gonna just wrap up this panel soon, and thank you so much for all the panelists today. Thank you for your time, and we can discuss more like while we're outside here.
Thank you guys so much.
Thank you.
Thank you.
Thank you.